Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. Hello, everyone, and welcome to the program. This is Moneyline with Nancy, and I am Nancy Naji. So nice to see you live and direct again in 2025. This is my official live show for this year. I know a lot of people were like calling me, hey, Nancy, back on the, normal. I needed also to rest, to refresh, to recalibrate, to recharge, as it were. Like I told a friend of mine, Nigeria problem, no, they finish. They finish. Someone saw me at the salon a few days ago. A lady, she recognized me and she was like, Madam Nancy, you've been speaking for over 15 years on the same issue and nothing seems to change. And, I get a lot of that. But my response to her was that, what is the option? Is the option for us to keep silent and not to speak? We they talk since they even the day like this. What if we know they talk? But anyway, it's good to be back. And I do hope that we all have a productive year. In fact, Mr. President has promised that 2025 will be better. So today on the program, I will start the year by talking about driving economic sustainability. What are our new priorities? What should be the priorities for the year? My guest will be joining me shortly. He will be coming up shortly to talk about the priorities for the year. 2024 has come and gone. It was indeed a rough year, a year whereby, of course, we saw the remnants of subsidy removal in 2023 cascading into 2024. Petrol prices in the range of 1,000 naira and even more. Though now we're seeing some petroleum marketers saying they will be selling for less than 1,000 naira. But indeed, Nigerians are still struggling. But even in the midst of all of this, December was indeed dirty. What they call the Dirty December, where we saw many Nigerians, people coming into Nigeria to spend their holidays, especially Lagos State being the recipient. In fact, I was reading a report saying that I think at the immigration services recorded over 550,000 people coming into Nigeria, and the port of call, of course, was Lagos. Lagos was really the recipient of the monies that came into the holiday. Lagos, some people from the southeast came into Lagos State to spend the Christmas and indeed the holidays with their loved ones. So work has started. Like I mentioned earlier on, let's hope that 2025 will be better. But so many things to talk about this today. Over the weekend, also, the MBS was indeed trending. The National Bureau of Statistics, as I said, that it would include the underground economy, the shadow economy, the parallel economy in the GDP computation. Of course, the rebasing, which will be finalized, I think, by the end of this January. If you are an ardent watcher of the program, you will recall that I told you about that in 2024 when we were told by the MBS that the GDP will be rebased. We may not necessarily also be the largest economy on the continent. We might also necessarily be, depends, and not just the GDP will be rebased, but also the CPI. What are the implications of this? And in case you are lost in track or you didn't get what I said earlier, that the NBS says it would include activities from the underground economy, the legal economy, let me put it that way, drug peddling, drug trading, prostitution, all of that into the GDP, and that has generated a lot of controversy. The NBS is saying, okay, they want to follow international standards. Come on, what actually is international standards? When it comes to that, you want to follow international standards, but other things you will not follow international standards. You say that Nigeria is a peculiar nation. So we'll be looking at all of that. Don't also forget that just before we went home for the holidays, President Tinubu sent his budget proposal to the National Assembly. That is still being worked on now. Budget proposal of 49.7 trillion naira. What is the outlook for this year, really? What key sectors should the government, as well as even the states, prioritize? I did also tell you before I went home for the holidays, that a few states, of course, submitted their budgets to their own state assemblies. Lagos, Enugu, close to ₦1 trillion budget and all of that. Lagos too, of course, in the ₦1 trillion range. But should we get better expectations this year? So coming up, we have the cardinal. Coming up, of course, our guest will be joining us. Like I mentioned earlier, our guest will be speaking about the new priorities for the year. That's it. Oluwole Adelokun, who is a partner strategy services, KPMG Africa. He will be joining me shortly. So I think we should just get into it straight. So many things to talk about. Let's quickly take a break. And when we come back, we will continue with the program. So I'll be back at you. Don't forget to connect with us on all our social platforms. I would like to hear from you more than ever this Monday. So let's get into our conversation. Right now, my guest is with me, Mr. Oluwole Adelokun. He's the Partner Strategy Services, KPMG Africa. Hello, Wale, and welcome to the program. Happy New Year.
Same to you, Nathan. Thanks for having me here.
Now, let's get started. And let me start on this premise. Will 2025 be better than 2024? I wanted to say tougher, but I said no. Let me be an angel this morning and not say will 2025 be tougher than 2024, but will 2025 be better than 2024?
Yeah, a very strategic question. 2024, you're right, was a very, challenging year. You can characterize 2024 in 3 words: volatile. The speed of change was high. It was also a period for reset. For the Nigerian economy, we've been awash with subsidy, not paying market price. So the price people have been paying has been below a marginal cost of production. But overall, we saw resilience. At the end of the year, we ended with about 3.4, Q3 2024. We ended with about 3.4% growth in terms of our GDP, external reserve at about $42 billion. Now, 2025, will it be better? I think so. Is a year of recovery and a year of rebound, because the reason why I say that is that, so if you look at the past, we are close to equilibrium in terms of the market price that we are going to be paying, and you will see a recovery, some sort of stability relative to what we had last year, which was extremely volatile.
Extremely volatile. Are there remnants of 2024 that will influence 2025?
Definitely. There are some parts of 2024 that are still here. An example is the issue around inflation rate, which is a cost of living, is still extremely very high, at about 34%. That is something that must be attacked in an aggressive manner. That's one area that would also impact 2025. I think another variable that will be also very important that people will watch is actually exchange rate. We also have some sort of impact. Are we going to have speculative attack on Naira? Are we going to have some sort of stability? We're yet to see that. So we're still going to see some, but I think overall, when you compare what will happen this year to last year, this year will be relatively stable, and we're going to see a bit of rebounds in the economy.
Okay. You said a few words earlier on. You talked about resilience, that we showed resilience. That resilience, is it on the part of the people or on the part of the economy?
So I think it's a combination of the two. One thing you can't take away from the Nigerian economy is the spirit of the Nigerian people, which is why even if you look at what happened in December, despite the volatility, the high cost of living, you still see significant expenditure that came in. And we came up with the term Dirty December. So that spirit...
But the expenditure mostly was even from the diaspora, as it were. Because if you take a look at it, you come in with like £100 or even £500 or $500 US. You know what you are like in the millions. So even with that, with $1 million, $2 million, you are game for a week. Here, as it were.
But overall, as you look at the Nigerian people, I think that spirit is there to actually confront the challenges, come out of it, and then face the future. I think that's one of the things that has actually kept the economy going. And I think another thing is there's a strong confidence in this economy. I mean,
By
if you
who?
look, by even the business community. If
Is
you
it
look at
international? Because local, there's no confidence.
not even the local. I mean, data shows that. If you look at the PMI figure released, by CBN, it was actually clear that it was greater than 50%. So there is a
It's been
trust,
hovering around 50, 51, 52.
but it's
Which,
also,
which it has been hovering around that for a while.
but it's an
And it comes
indication.
down to about 49.
No, but at least overall, if you look at 2024, on average, it's actually slightly above 50, which demonstrates the confidence in the economy, by the business community. And I think the reform that we're taking, the question we should have asked ourselves, if we haven't gone that path, would have been worse off. So that what if analysis, if it has been done, would have been worse off. So overall, there is that spirit in the Nigerian people. There's also confidence in actually the reform part, and you could see that coming through. And that demonstrates the resilience. Despite the challenges, we ended Q3 with the 3.4. And let's be real, when you look at that growth relative to other markets, it's not small. Though the growth is driven by services, but yet it still demonstrates confidence in the economy.
I'm struggling with that word confidence. I know that the data, of course, people will say, okay, your GDP at about 3% and all of that. After all, we are not in a recession. It's not negative, as it were. The economy is not declining, as it were. The outlook is that it would also be in the upper range of 3% this year. But what I'm saying I'm struggling with that confidence word is that in 2024, a lot of companies closed down. In 2024, a lot of companies downsized their staff. In 2024, a lot of people were out of jobs, as it were. The president, of course, did also mention that he's not going back on the petrol subsidy. So I'm struggling to know what you really mean by confidence, because there's a high cost of living. There is a cost of living crisis, which is still existential. It's still there. But in the midst of all, like you rightly mentioned, Nigerians are resilient. I don't know if it's resilience or docility or whatever it is, But in the midst of all, Nigerians still find a way to eke a living. Would you call that confidence, really?
I will call it confidence, and we must be able to understand where we're coming from.
Confidence in what, Wole?
Confidence in this economy's ability to actually always rebound and actually deliver, expected growth. And that is why you will see that even some international community, as for example, KPMG will work with different clients across, different sectors. We've seen clients taking a bet in this economy, flying to actually invest in agri, flying to invest in energy, flying to invest in opportunity areas that are opening up. So that tells you that despite some of the challenges, and the challenges actually is driven by the fact that we've lived in the world of illusion. We're not paying price that is close to equilibrium. Now we're getting to that market price that is close to equilibrium, and because of that, you begin to see more investment, people having, hope. So the economy on an overall basis, yes, it was challenging, but people have confidence in this economy.
I don't know why I'm struggling with this today, and for me, I'm thinking it may not be too good for because we also need to sell hope, as it were. But if we take a look at that word confidence, and let me still go back around. Now we're talking about business climate. How would it look like this 2025? Bearing in mind that even in 2024, as it were, from even 2023, or even in the past, in the last few years, we've seen, but it's grown worse. We've seen companies that involve in shrinkflation, whereby, of course, they reduce the size of their commodities. You understand what I mean? Then skipflation, they reduce also the quality. Let me give you a scenario. And I know a lot of people may have noticed it. I bought a popular beverage, a popular cocoa beverage, 400 gram, this size. When I opened it, it was about 250 gram. So what I'm talking about is shrinkflation. The company is still producing. Nigerians could actually even be paying more, but I'm not getting the same volume for what I paid for. And it's not just for this, it's across board. So are you telling me, I hosted the NESGCO roundtable last year, and I spoke to executives, Cadbury, Techno Oil, and all of that. And they told me, Nancy, the thing no easy. That business, they are not doing well. So that's why I'm saying I'm struggling. I know you are KPMG Africa. You speak to all these companies, but I'm struggling with that.
Okay, okay. So I think in coming to a conclusion, you have to use data to actually arrive at that conclusion as to whether we're on the right path, whether in terms of the overall impact on the economy, where are we? Yes, businesses were actually impacted. So if you take manufacturing, there were data that also suggests that manufacturing was actually significantly impacted because of cost of production as well as the cost of financing the operation. But if you go beyond that and you look at some other businesses, from data that we even got, some companies actually did extremely well. Consumer markets, they actually did well.
That's the class I'm talking about now.
Yeah, in terms of their, performance, in terms of their revenue, and like I said, I think people have also come to realize that in the past, we haven't been paying the price that is close to equilibrium, the real market price, which actually informed the way we're living before. Now, there's an adjustment that is taking place that is helping people to actually fit their lifestyle. I was listening to a guy, and he did mention that, in the past, he has a couple of vehicles, SUVs, but when he discovered that there was actually increase in the PMS price, he has to change his lifestyle. He has to go and get a Camry.
But is that necessarily a good thing to say? Do you understand? I don't know if you understand.
I
If I
think
have
it is
stuff, if I have
because-
stuff, I should be able to. The economy, I don't know if you understand what I'm saying. Is it necessarily a good thing to say? And I heard even the president say it, that we should manage and co. I've always said it. Sorry, Wale, I know this is getting a bit too hot for you, but I just need to say it. What model of economy do we want to create? Do we want to create the US model, for example, and want to go the UK way? In the US, for example, they encourage even their citizens to spend. The economy is more robust. So you telling me if I have 5 cars, if I have the money, let me use my 5 cars. Don't tell me to manage. Do you understand? Because it would also expand the economy. If I'm buying petrol, the petrol attendant is having job, there will be more money for NNPC retail. So don't give me that. I'm not in that school of thought. I beg your pardon.
Okay.
Do you understand what I'm trying to say?
But you have to live within the capacity of what you believe. In the real time, you can pay for the prices.
Because the economy is forcing me to do that, not necessarily that it is good.
No, in the past, we've enjoyed significant subsidy.
Because the government was paying for it, as it were.
Yeah, but it's not sustainable. It's not sustainable. So we need to actually reverse and move to an environment where you can actually pay the market price. If you are vulnerable, that government needs to care for, I understand. But you have to pay the market price that will encourage investment and generate job opportunity for our people. And that's the path to go.
I understand what you're saying. That, of course, with this, with government taking its hands off subsidy payment and all of that, it will free up more funds for government to be able to expand other parts of the economy. We're yet to see it, but let's see if we'll do that, if we'll see that in 2025. That brings me to the next question. What should be the priorities for this year, really, on the part of government? Even though that President Tinubu highlighted a few of it in the budget speech, but what do you think should government focus on this year?
Okay, so as I reflect on this year, my view is that, when you look at an economy, basically you can look at an economy from 4 main dimensions. There is a consumption, there is an investment, there is government expenditure, and then there's a difference between your export and your import. Now, one critical element that government needs to focus on this as a priority is how do you actually stimulate that consumption? And one of the major challenges we have today in the country is a conversation around, food deficit, which is linked to inflation challenge. So I think this year, one primary thing that government needs to focus on is how do you actually ensure that you make food available? How do you ensure that you deal with the problem of inflation in a strategic manner? We've used the monetary policy instrument to do that, but haven't achieved the desired results. So it then becomes imperative that the fiscal authority work with the monetary to actually address that insecurity, address logistic problem, and ensure that we can actually drive down inflation. I think the second thing that is important is if you look at our growth, yes, we've been able to deliver 3.4% as our Q3 2024, but that growth is actually, if you decompose it, is actually driven by services. So it's important, and services it leverages technology. So you need to go to that sector that has the capacity to employ people to create inclusive growth. And that includes agri, that includes manufacturing. So we must be able to demonstrate investment, encourage investment in that sector. And I think the decision to bring in a new Minister of Trade, Industry and Investment into that space to stimulate investment will be very important. I think the other thing is ability to earn FX is extremely important. Today, given the structure of our economy, we're limited in earning FX. So how do we enhance our capacity to earn export revenue? Those are the things I believe government should focus on in this 2025.
President Tinubu, you talked about inflation, has an ambitious target. Of course, in his budget speech, he talked about reduction of inflation this year to 15%. And how ambitious is that? Is that inflation target? Bearing in mind that even last year's inflation target was not achieved. What are the things that we need? You've mentioned a few, at least agriculture, because our basket is mostly like food inflation. So if they're able to reduce food, perhaps produce more food, it will impact the basket. But how ambitious is this target of 15%? Is there any other thing that can be de-risked for us to be able to achieve? 15% is not even 15% is also high inflation because it's also double digits. But from where we are now at 34, if we see a 15%, we go clap.
To be candid, given where we are, a 15% target from our point of view is optimistic. It's extremely optimistic, and to deliver that, I doubt it will be delivered. As we reflect on this, I think with the targeted approach, we should be able to deliver maybe an average of about maybe around 22 to 25% this year.
You're even optimistic.
Now, but the question,
22 to
though there is another
okay.
conversation around that, and I'm hopeful we'll get there.
Yeah.
The rebasing the conversation
Yes.
that is ongoing.
Yes.
So a 15% from our point of view will be extremely challenging. Now, to even deliver, like you said, a 22, 25% also is extremely will require significant work. Yeah. Now, what are the levers that needs to be, leveraged to actually deliver that kind of, results? One specific area is logistics. When you look at moving goods from the production center to farm gate is extremely challenging. That area needs to be dismantled. Government needs to actually focus on it. Number two is the fact that in terms of our production capacity, we must be able to provide high-yielding seed, for farmers. We must be able to invest in fertilizer. We must be able to ensure that we address these challenges to be able to provide that succor and drive down inflation. If we go on the route we took last year, where we're leveraging monetary instruments to actually fight inflation, because the problem we have, if you look at our inflation, composition, only about 35% can be explained by interest rates. A significant point of it is structural. So our ability to address those structural issues and challenges are extremely critical to deliver a reduction in our inflation rate.
So let's go over to the NBS rebasing. Let me be able to tie this, because the other thing coming to my mind is, of course, the president, the Minister of Budget and Economic Planning must have hinted the president that the GDP will be rebased as well as CPI. Perhaps that is also the thinking why 15% was done. I don't know if you understand, because perhaps if they rebase, if we take the way they rebased the unemployment numbers and we have unemployment now 4.3%, perhaps that will bring our inflation down. I'm just assuming from about 34% to lower than what it is. And I know there will be a lot of uproar around that. Are you seeing a semblance of that? I'm not within the corridors of power, but I'm just thinking if that sentiment, or if there was a sense of this for us to have a 15% inflation target for this year?
Well, I mean, until the data is out from NBS, unfortunately, the site is not accessible at the moment.
Yes, at the moment.
Until the data is out, we can then confirm whether that was what informed government thinking. But I mean, last week there was conversation where NBS with NJS actually had a public, roundtable. I don't think from my own point of view that the 15% target is actually driven by the rebasing that we're looking at.
Okay.
Because the rebasing, according to what the NBS, is to index it to the base year of 2024.
That's for the CPI.
For the CPI.
Yes, yes.
Now, even that one also actually should be challenged, to be candid, because if you are rebasing GDP to 2019, now you are moving inflation to 2024. What then happens is that it would drop our inflation significantly, from, it's like you alluded to, last, in 2023, we had unemployment rate drop significantly because there was a change in the methodology. Whereas as of 2020, I think Q3, our unemployment rate was about 33%.
Yes.
And then we got into 2023, we said it actually dropped to about
4.3 now.
You understand? Now, so I don't think that rebasing, indexing it to 2024, would actually drop the inflation to, we don't understand what is driving that. And to be candid, I don't think there'll be distortion in terms of policy, response. So take monetary, for example, authority. They've been having interest rate very high with a view to actually attract portfolio investment and also control inflation. Now, so the question is what happens? Because if you rebase to 2024 and you're in 2025, it will drop. Are we going to have like a
interest rate drop?
No, an inflation rate drop.
Okay.
A single digit. So what then happens to monetary policy?
Exactly.
From a policy response point of view.
Exactly, where you already have your rates in the upper 20, about 28% interest rate. So what will happen when you rebase CPI?
Exactly.
That's actually very interesting.
And then you are sending the signal to the investment community also. So I think there is a thinking that needs to go into the rebasing. We don't have the detail, we don't have the results yet, but indexing your GDP to 2019 and then moving your CPI to 2024 is something that we need to see what is the data supporting that.
And in fact, the central bank's MPC has postponed this January meeting to February. So perhaps it's also thinking along that line. MBS would release, let's see what, so they had to postpone the January meeting to February. There's, of course, a new timetable for this year's MPC.
Exactly. It would have been great.
February 17th.
Yeah. It would have been great if there is a bit of consistency where as you rebase your GDP to 2019, and the reason why they've not taken 2020 to 2020 is because of the distortion we had in the economy. We had COVID, we have significant stimulus, so 2019 appears to be relatively stable. So the same thing, we have a lot of structural changes from a reform that happened between 2023 and 2024. So it would have been good. Initial conversation we're hearing was that it would be indexed to that CPI to maybe 2020 or 2021. Now moving into 2024.
Let's talk about a very sticky point, a very controversial point that since the MBS mentioned this a few days ago, talking about the inclusion of the underground economy. I mentioned it at the beginning of the program, and perhaps what that means for our viewers, the illegal, the hidden economic activities into the GDP computation, where you have drug trading now, prostitution, all those things, It's still the same NBS that came up with a report just before we went home for the holidays that kidnapping for ransom, generated about 2.3 trillion naira, and that's about 10% of 2024's budget, So that means that we're even paying for our security because even the defense budget was even up to that last year. So what are the implications of this? Because the MBS has been getting a lot of knocks right now concerning this. And he's saying that we need to reflect it for economic realities, that all this are happening in the economy.
I think the first thing is the decision to rebase is actually on the right path. because it enables you to have insight into the structure of your economy. It gives you insight into the size of that economy. The last time we did this was in 2014, when the base was 2010. So it's important, given that we've had a lot of new sector that government wants to focus on. So if you take marine and blue economy, digital economy, pension, and the rest. Now, the question as to including illegal activities within that space, within the rebasing. So I think there are different school of thoughts. There are different school of thought as to whether it's right or not. If you look at African economy, I think it's only Nigeria that is moving in that direction. Europe, they focus significantly on that because of the way they compute their GDP. Now, for us as a country, I think, one, it could help in policy direction, for government to say, okay, as we think about these various sectors or these various activities that's never been captured, it could help in coming up with strategic policies to actually address those specific, illegal activities. But the question that needs to be asked is, are we going to have enough data to actually estimate the size of these various activities? There's also conversation around the ethical point of view. Because today, if you're looking at your exchange rate from a CBN point of view, you have to use the official rate for the purpose of any economic analysis. Black market is not actually recognized, so it's within the economy. Now, does that mean we want to legalize certain activities, and yet we're not consistent in terms of saying black market is not something that can be used for economic analysis? So I believe that is a conversation that we should have as to whether it's actually important or not. But I think from a policy direction point of view, maybe government is thinking, if we actually capture this, we can actually be able to come up with policy framework that can address some of the issues.
Where do you stand?
So I'm not, I don't have expertise in that space, to be candid. I think what is important is the need for us to, evaluate, understand the structure of this economy, understand the size of this economy, because it has implications for other strategic decisions, whether in terms of your GDP to your debts, debt ratio to your GDP ratio, your deficits, which can enable you to do a lot of things. Let's leave the guys that have expertise in illegal activities to actually address that.
That's interesting, and I wouldn't want to prod you further on that. So just as we close, how do you think that the government can really enhance efficiency this year in the midst of transparency, as well as implementing the 2025 budget when it comes, to ensure that allocated funds really achieve their desired success?
I think that's a very good question, and I think it's something government should actually focus on. They've actually started to move on that part. There is a digital platform and app which they call iReport that was launched some time ago, from the delivery unit. I think there should be ongoing, communication around that. But more importantly, there was something we did some years ago under the, one of the former honorable minister for finance. I think it's important that going forward for this year, government should be able to provide information on the size of what is being allocated to each ministry, when releases has been done, what are the specific milestones, that meant to be delivered, and people should be able to have information to track that. If we do that, I think there'll be value for money and we'll be able to generate the desired results. Okay,
one word for this year. One word.
One word. So last year was resilience. I think the word for this year is rebounds.
Rebounds.
Yeah.
Okay, rebounds. All right.
Because we are close to equilibrium.
We're close to equilibrium. We're out of the precipice?
Yeah.
So we're close to equilibrium. All right. That's the word of Oluwole Adelokun, Partner Strategy Services at KPMG Africa. Thank you very much for joining us.
Thanks for having me.
Thank you. Thank you. Thank you for watching. In case this is your first time watching us, thank you. Don't subscribe to the channel, drop your comments as well as like, and most of all, share our content. Bye.